Good day, this is Carlesle Margareth Rios, BSBA second year, and this is Economics 122 with an EDP code of 73013, and this is assignment 1 macroeconomics. First question is define what is economics. Economics can be defined in several ways. It is the study of scarcity, how people use resources and respond to incentives, or how people make decisions. It frequently incorporates subjects such as wealth and finance, but it is not solely about money. Economics covers from the micro to the macro, and microeconomics is the study of individual decisions, and macroeconomics is the study of the economy as a whole. Everyone's life is influenced by economics. Understanding economic principles can help us understand the news, make financial decisions, impact public policy, and see the world in a different light. Second question is who is the father of economics? Adam Smith is called the father of economics because of his theories on capitalism, free markets, and supply and demand. Third question is what are the branches of economics and define each? The microeconomics and macroeconomics are the two primary subfields of economics. The conduct of particular homes and businesses, as well as how the government affects that behavior, are the focus of microeconomics. While macroeconomics is the study of issues that affect the entire economy, including inflation, unemployment, and total economic growth. Fourth question is what are the basic 10 principles of economics and give the understanding to each principle. So first is people face trade-offs, um, meaning there are no free meals in life. It means making choices entails sacrificing one object for another. Second is the cost of something is what you give up to get it. It refers to the other items or services you have to compromise on in order to purchase the item you want. Third is the rational people think at the margin. Decisions are frequently made rationally by contrasting marginal advantages and marginal costs. Making judgments in the margins is effective in business. Fourth principle is people respond to incentives, means prices in market-based economies operate as incentives for buyers and sellers by sending signals that alter the quantity of a good or services they are willing to buy or sell. Fifth principle is trade can make everyone better off. It means it enables individuals to concentrate in pursuits where they have a comparative edge. The concept of comparative advantage holds true for both nations and individuals. The concept of comparative advantage is used by economists to promote international trade. And six is market are usually a good way to organize economic activity. Means markets are guided toward ideal results by the invisible hand. Governments occasionally have the ability to influence market outcomes because externalities or market power might prevent markets from allocating resources effectively. Seventh is government can sometimes improve economic outcomes, which means governments can impose tariffs which add taxes to imported goods or subsidies, which raise prices and improves the appeal of indigenous goods by taxing the public and transferring the money to an industry. Business or entire industries might be stymied by increased taxes levels and regulations. Eighth is the standard of living depends on a country's production. Productivity is important because a country's standard of living depends on its availability to produce goods or services. The greater a country's productivity, the greater will be its standard of living. So the ninth principle is prices rise when the government spends too much money. It is true since people who make a living by selling things boost the cost of their products, services, and labor. The value and purchasing power of the newly minted money are reduced as a result. And tenth is society faces a short run trade off between inflation and unemployment. Um, poly, means policymakers can reduce unemployment by increasing aggregate demand, but only at the expense of an increased inflation. They can reduce inflation by reducing aggregate demand. By doing so, will temporarily increase unemployment. Fifth question is brief history of macroeconomics and who founded or the father of macroeconomics. So, the father the category of economics called macroeconomics studies how an economy as a whole, markets, firms, customers, and governments operate. Macroeconomics studies trends in the economy as a whole, including inflation, price levels, economic growth rates, national income, GDP, and changes in unemployment. The father of modern macroeconomics is John Maynard Keynes, who developed Keynesian economics through publishing books and essays that theorize his economic theories. Sixth question is what are the macroeconomic concerns and goals of a country and its impact to the nation? In order to raise living standards, create jobs, and boost productivity, nations seek for a consistent and stable economic growth. High economic growth rates are a sign of a thriving and healthy economy. The goals are backed up by other objectives, including reducing unemployment, boosting productivity, and reducing inflation, among others. Economic indicators are essential for evaluating various performance facets because the macroeconomy of a nation is influenced by a variety of factors. Um, Next is show the circular flow model and explain your thorough understanding of it. So the circular flow model depicts how money circulates in society. Money goes from producers, employees as wages, and back to producers as product payment. In a nutshell, an economy is a never ending cyclic flow of money. And last question is what have you understood on law of supply and demand? The law of supply and demand states that prices will increase if there is an excess of supply compared to demand for goods or services. Means prices will increase if demand outpace supply. The price at which the supply and demand are in perfect balance is known as the equilibrium price in a free market. Two fundamental economic theories are combined in the law of supply and demand to explain how changes in the price of a resource, good, or service impact its supply and demand. Supply grows as the price rises, but demand drops. In contrast, as the price falls, supply is constrained and demand is increased. That would be all. Thank you.